Let's talk about him and hers, stock symbol HIMS. This stock is up over 200% going back to January 10th. And I think it's definitely a stock that is very difficult to just try to jump in right now. I know there's like a lot of short dated options trading that's been going on with this one, hoping that it can give you another rally day after day after day. And so far, it's been doing that. Going back for about a month, it's just solid rallies left and right. So what I want to do in this video, I want to provide the technical analysis. I want to provide you with what the charts are telling you, what the charts may be suggesting is going to happen going forward with HIMS, and to be able to make a game plan accordingly. So let's go ahead and take a look at the chart. Like I said, up over 200% since January 10th. It makes going after it at this point with a new entry a huge FOMO play. You're chasing after stock price. That becomes very, very difficult to be able to control the risk on. So there's a lot of trend lines that are still in place with this one and could suggest that there's a massive pullback on the horizon. Doesn't mean that you have to get out of it right now. You could be subjected to a gap down. That would be unfortunate if you're on the long side of it. But first off, you have this purple rising trend line here. This goes all the way back to 2023, October 2023. And you can see where it's come back and tested it each time, and it's a long, long ways from going back down there. I mean, it would have to just completely plummet. That's not something in the here and now. That's not something I'm really interested in. If you get closer to it, then maybe we can start talking about it again. But I think it's a waste of time at this point. But what may not be a waste of time is this blue rising trend line. Now you have this like expanding megaphone here, and it was staying in it consistently. The higher highs were gaining a little bit more momentum, which was an encouraging sign. And then this declining resistance here that goes back to December broke out in early January, and ever since then it has just been off to the races. And so the momentum came in, the FOMO came in. I know there's a lot of news pieces out there, a lot of things that people will point to saying this is why it's going up and this is why it's going higher. Remember, I'm looking at it from a technical standpoint, not the fundamentals, not the corporate filings, none of that. I'm just looking at it for what it is. So if you get a pullback here, the first layer of resistance is going to be the top level of this megaphone pattern, and it's held up pretty well on the resistance side until it broke out back on Thursday of last week. So what you want to see is there still any respect for this level here on a pullback? If it holds it and bounces, then that could provide you with a decent reward risk opportunity. I think it's going to be volatile no matter what, so you're probably still going to look at least like a 15-20% stop loss, but for me that's too much. Some of you guys out there, that's like your cup of tea. And while I don't like that stuff, I can respect somebody who's able to manage the risk on something like that. There's also a couple other areas here that you want to watch for. This yellow line right here, this is a huge price level resistance. I don't see that happening anytime soon. But if this level right here breaks, there's not a lot of support underneath. So if this area starts to get breached, then really all bets are off the table. You start to get into some risky areas here, because if it pulls back, it could fall down to 28 before it finds any support. Now, I know a lot of people are going to disagree with me on that, and that's fine. There's a lot of different support levels that this could end up, finding some support at. Now, right now, it's not even showing signs of pulling back. It's doing really well. So if you're in the trade right now, one of the things that I would do is start to follow these moving averages. This yellow line right here, this little squiggly yellow line, that is your 5-day moving average. And so far, that has not broken yet on a closing basis. It's been really, really strong going all the way back to January 28th. So for the entire month of February, this, while it may have been breached intraday, it hasn't seen price close below it just yet. So what I would probably do here, if I'm looking to manage the risk, of course, I'm going to take some profits along the way. If you're not taking profits after a 200% move to some extent, you may be getting a little bit on the verge of greedy. And I think you may be getting a little bit into fantasy land about what the potential of the stock is, because just as much as it goes up, it can come right back down. And I promise I'm not trying to do any puns there. So 5-day moving average, look for it to, if you get it close below it, that would probably be my reason to go ahead and get out. This is a steep 5-day moving average, so probably tomorrow you're looking at it being around $64, $65. If it pulls back to that level, closes below it, I'd probably go ahead and exit the trade. Say, hey, I made 100, 150, 200%, whatever it might be. Pretty good move there. What I wouldn't be doing is trying to get long at this point. And if the first day that it's down, isn't necessarily a reason to get in. Don't think that that's a generational buying opportunity, because it's not. So if you want a little bit wider, then you could always go out to this 10-day moving average and just essentially say any kind of a breach, whether it's intraday or whether it's on a closing basis, I'm going to go ahead and get out of the trade. If you do that, that's acceptable strategy too. The tough part of these kinds of trades is there's not a lot of support levels that you can really draw your attention to for putting a good stop loss. If you're not going to use the moving averages, I would probably say like this, the lows here from February 18th could be a good valid stop loss placement. If it breaks below that, you want to get out, whether it's intraday or not. The last thing that I want to point your attention to is this huge volume bar right here. I always call these things like Yao Ming volume bars. You know, he was that old NBA player a long time ago. He was like 7'6" or 7'7", huge. He towered above everybody. And so when you get these volume bars, oftentimes they can signify that a reversal is right around the corner. And in the past, this stock has had some reversals when these huge volume bars start to creep up. I mean, you look at, for instance, right here, you had a huge volume bar on 1125, and it didn't really progress much higher. It progressed a little bit, but eventually it went from about 35 all the way down to 24 before it made this epic run. Here again, you have a huge volume bar, which came on some heavy volume as well, or heavy selling, and had another day of selling that followed before it moved higher. Again, you look at like right here on the October 8th, the point being is that it may not be a very long sell-off, but there's been selling when you get these huge volume bars, whether a red bar like this one here or a green bar. They typically tend to suggest that the buyers are getting well off sides and you're setting yourself up for an opportunity to get rugged. So you look at stocks like PLTR today. You know, this stock is one that people thought, okay, this thing's not going to go down anytime soon. It got rugged. It's down 10% just in the blink of an eye here. You can see the intraday price action. So what you're wanting to do as a trader, if you're in HIMS, you want to make sure you don't get rugged, because you saw that today with HIMS or with PLTR. You also saw it with SMCI, where SMCI went from over 66 all the way down to 56. So the potential for that happening to HIMS is very high. So you don't want to get caught in the stock and see the stock get a hard sell-off, and then all of a sudden you're like, man, why did I not take more profits, or why was I not more aggressive about my risk management? Because that can happen. As always, what I try to do in these videos, I try to give you reasonable technical analysis. I'm not trying to overhype things like you see all over when you search for information on the stock market. I try to give you my opinion. It's just my opinion, and I hope it. Look, whether we're on the same side in terms of our understanding of what we think the stock is going to do, I hope the best for you guys. I hope the stock does well for you. If you enjoyed this video, I would encourage you to like and subscribe, and let me know down in the comments below, what is your angle with this stock? How much higher do you think it goes? Are you cashing out already? Are you playing short-dated options? What is your plan? Thank you guys, and God bless.